Hello and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. As always, let's start with a look at the markets in the European session. And so far, it's been a bit of a low volume session, really. We've got the bank holiday in France and Germany. Of course, the markets there are still open, but this does tend to contribute then to lower trading volumes. It's also been a bit of a quieter morning on the economic data side of things as well. So there hasn't been too many catalysts in the markets. So far, we are seeing equity markets trading in the green across the board, though posting some small gains. We are seeing oil trading higher as well, which is because of these, which is being partially attributed to these fires in Canada and possible supply disruptions. Their possible supply disruptions as well in Libya being attributed to these gains that we're seeing in oil so far today. Not sure I'm completely buying into these yet, but either way, we are seeing oil up between 3 and 4% on the day. In the currency space, we are seeing the Aussie dollar making gains up around 0.5% against the dollar, but again, this is only small gains in comparison to the losses which we've seen over the last few trading sessions in the Aussie dollar. So I think this is a case of pairing those losses as opposed to making any substantial strides on its own. We are seeing the euro down around 0.5% as well, but like I say, no overly significant gains today. Bit of volatility we are seeing in the markets. We aren't shy of that today. But like I say, these lower trading volumes can sometimes contribute to these spurts of volatility. We're going into the afternoon now. We'll take a look at the economic calendar actually now while we're on the topic. And as you can see, we're heading into the afternoon. We've got a lot of economic data. Let me say that again. We've got little economic data to come from the US. The only notable release being the initial jobless claims and the continuing jobless claims. That will be released shortly. Don't tend to have a major impact on the markets, these numbers. We're expecting another very good number though at 260, up slightly from 257 a week earlier. The most important economic release today really came from the UK, the UK Market Services PMI. The reason it's so important is because the services sector, of course, equates to around 78% of the UK economic output. So when the services sector is performing well, irrespective of the other sectors, we do tend to see the economy continue to perform well. We tend to see quite decent growth figures. But really, the services PMI was very much in line with the construction and manufacturing PMIs that we've had over the past few days, in that they pointed to a slight slowdown of growth, or in the case of the manufacturing PMI, an actual contraction. Really, the numbers fell to a 3-year low, again in line with what we saw in the construction and the manufacturing PMI as well. The pickup in new orders was slower than we'd seen in previous, really over the last couple of years. And really the same causes are behind this as well. The EU referendum is acting as a drag on the services industry right now. We are seeing companies delaying orders as a result of that, delaying spending as a result of that, potentially being felt on the consumer side as well. The other thing that they pointed to here was the higher input prices. So this is the prices that usually lead to higher inflation down the road, but the adoption of the living wage, the national living wage in the UK, has led to increase in input prices, which is likely to be passed on is likely to either be passed on to the end consumer, or we may see companies absorbing some of this and reducing their own margins. But I would expect at least to see some of this passing on to the end consumer, at which point we should start to see inflation picking up a little bit. And because of these concerns over the EU referendum and the lack of investment, but also potentially because of the rising living wage and rising costs, we have seen employment growing at a much slower rate as well. So not the best of figure here, but really just confirming everything else that we've had this week from the UK in terms of PMIs and the data we've had over the past few months. Really, it suggests that the second quarter is going to be very much like the first quarter. In fact, we're probably expecting to see even slower growth in the second quarter than we got in the first quarter when we saw GDP at only 0.4%. Still to come today, though, we have, like I say, we've got very little economic data, but we do have 4 Fed speeches, which I think people should keep a close eye on. James Bullard, we've got Williams, Lockhart, and we've got one other Fed official as well that slips my mind. But we do have one other Fed official as well speaking today. So we've got 4. We're going to hear from 4 different Fed officials. Again, we're not close to a Fed meeting at the moment, but people are counting out the possibility of a June rate hike so much now that any hawkish comments could create some volatility and could create some significant moves in the market. So that's the one thing I really would be keeping a close eye out for in today's trading session. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.